Captive is an insurance company that is owned and managed by the companies that it insures. If you're a member of a captive, you own a small part of the insurance company that's providing you insurance. Captive members enjoy a lot of benefits from being in one. For starters, we take you out of the roller coaster of the guaranteed cost market. So the member is now rated upon their own experience. This tends to push the member's cost curve down over time. That's a pretty good thing. On the same token, we are building underwriting equity. So your insurance premium dollars that are not lost to claims come back to you in the form of a dividend over time while earning investment income. You also have a tremendous amount of oversight of how your claims are managed, and a lot of business owners, they prefer that. Members really like it when they get to be a part of that. The demand for driving shareholder value in this day and age is so great. We want to demand shareholder value from every aspect of the business that we can. Captives enable a business owner to do that with their insurance program, whereas without a captive, it's always an expense. You are never going to be able to get more shareholder value for your shareholders out of your insurance program if you're just throwing checks to insurance companies. Captives enable that under the certain conditions, and if you understand and can tolerate the risk. There's all kinds of captive solutions out there. The most popular one would be a group heterogeneous captive, and that attracts all kinds of industries, from contracting to distribution to engineering to manufacturing. If you're in an industry that's a bit more risky, say for example trucking, you've got a lot of heavy trucks on the road, or maybe roofing, there's captives for you, but they're called group homogeneous captives, and so they're specific to certain industries. But by and large, if you're a well-controlled company with generally understandable risk and you're paying $300,000 or more so in premium, you probably qualify for a pretty good captive out there somewhere. So you're probably a good fit for a captive. If you've been around 5 or 6 years, you've got experience in your business, and again, you're paying that $250,000 to $300,000 range in premium. You also want a highly trained, qualified risk management professional on your side, someone on the HR team that's really good at handling claims, especially workers' compensation claims. You have to be profitable, right? So you're going to put some collateral up, so you have to have some cash. And you have to be willing to go long term. So a captive is not a short-term solution for 1 or 2 years as a fix. You're talking 4 to 5 years minimum to see over time how well you perform in your own insurance company. There can be a lot of misunderstanding and uncertainty around captives. I would not let that get in the way. Let someone at Higginbotham know that you're interested in talking captives. We can summarize it pretty succinctly for you and help you get comfortable with the model. And if you are, then we start talking about how your company would have performed had you been in a captive. We're going to give you that analysis and then talk about, well, if we decide to do this, how will it look and feel for your company?